Welcome to the Precious Metals Coach podcast, where we talk about true financial independence, choice, and freedom through the smart use of precious metals and income strategies. I'm your host, Dave LeBlanc. In this episode, I'm joined by Will Rhind, the founder and CEO of GraniteShares. Will has spent his career at the center of the gold market, from his early work at iShares to his time at the World Gold Council, where he launched the first and still largest gold index, the GLD fund, and now as CEO and founder of GraniteShares. In our conversation, we explore why gold is more important than ever, where it could be headed, and why creating additional sources of income, particularly through high-yield ETFs, is becoming not just valuable, but necessary. We also go beyond gold, diving into some of the biggest forces shaping our financial future: crypto, AI, rising interest rates, government debt, financial privacy, and digital IDs. This is a wide-ranging and eye-popping discussion that connects directly back to our mission here on this channel, which is to help you protect, preserve, and grow your wealth with strategies that go beyond the mainstream. So, enjoy the show. Will Rhind, CEO from GraniteShares. I'm really excited to have you here today. You offer a kind of unique career path. Someone probably, it sounds like, rooted in gold and evolved into ETFs and ETPs. A bit of a unique kind of background. Can you tell me a little bit about maybe what got you into, or maybe who inspired you to kind of get into precious metals and gold in the beginning?
Yeah, no, absolutely. Well, first of all, thank you, David, for having me. Great to be on your show and talk to you today. I got into gold and precious metals because it started with ETFs, and I was a member of the team at Barclays Global Investors back in the day, which is now BlackRock. And we were doing the first ETFs. This was in Europe at the time. And the industry was growing, and I could see that this was going to become, really a huge industry. And this product, the exchange traded fund or the ETF would become massive. And so within that, I was seeking out, more entrepreneurial opportunities where I could participate in some upside of the industry. And at that particular time, there was a startup ETF manager that was doing the first commodity ETFs. And long story short, joined that company, which was a startup at the time, but they had their big claim to fame was that they did the first gold ETF in Europe. And then there was actually a heritage that stretched back even further than that to the first sort of gold ETP in Australia. And then that plus the European one became the sort of the blueprint, if you will, for what was then the launch of the GLD in the US. So I got started with gold and commodities at that time. And then that company grew very, very quickly and became very big. And within that, I moved to the US. And once I finished at that company, because we'd built a brand within gold and precious metals, commodities more broadly, I then found my way to the World Gold Council after that. And I was the CEO of the GLD ETF itself, which is still to this day, the largest gold ETF, largest commodity fund in the world, and ran that business for 2.5 years before leaving and setting up GraniteShares, of which one of the first things we did was to set up our own gold ETF and commodity funds. So I've had a long experience with gold, always, the physical gold side, and then commodities more broadly, all through the lens of the ETF wrapper.
So when you were creating GLD, when was that? 2006?
So I started at the company was called ETF Securities. And so I
Okay.
joined there 2007. So GLD was created in 2004.
Okay.
The first European product was, I believe 2003, but around that time. And so we got involved in 2007. And then once I joined or went to the US, I joined the World Gold Council. That time it was 2013. when I joined them with the GLD slash State Street.
So back then, what if it's been a while now, if you can remember,
Yeah.
what were kind of the conditions that, the market conditions, say, or the macroeconomic conditions of gold at the time? And then fast forward to today, and do you see any similarities, any massive differences?
Yeah, I mean, it was a very, very difficult, obviously a different environment at that time. And frankly, gold really as an investment didn't exist until that point. Now, I just want to be specific because people say, well, people have been investing in gold for hundreds of years, etc. And I'm talking about putting gold into a investment portfolio, and that's really what the ETF did, was to change the game for investment portfolios and allowed you to invest in physical gold just like a stock. And so before that, you're going all the way back to the 70s, you had gold mining funds as one example where gold stocks were always the de facto proxy for gold because for a lot of investors that was the only way they could get exposure to gold because again, this is within the context of gold in a portfolio, not just buying gold coins, which you could have always done. So gold in a portfolio changes in the early 2000s with the launch of ETFs, and now you can actually invest in gold directly. And so the conditions to do that at that time, well, commodities were in a rally, but I think it's probably fair to say that the conditions for that probably weren't as known at that time or weren't as obvious at that part of the rally, but it was a multi-year rally in the early 2000s. But that was against a backdrop of gold prices that had been low and traded around a range for so long that people didn't really even consider gold as an investment in a portfolio in a way that people would now. And so you had clearly your believers in gold that bought physical bars or coins and or gold stocks. But in terms of people buying gold in a portfolio, that was really something new. And so a big part of what we did at the time was we had to educate investors, professional investors on, why you might put gold in a portfolio. And that sort of was the start of what we know now as the golds and the ETF market globally. But those conditions were such that gold was kind of uninteresting. It wasn't something that moved around a great deal, and therefore, to a lot of investors, they hadn't considered it as part of an asset allocation. So different world compared to today.
Yeah, I'm just looking at the long-term chart going back to early 1970s, and price of gold, between 200 and maybe 350. So you're right. It wasn't probably wasn't getting a lot of news, not a lot of coverage, and not very interesting as an investment. But, once the early 2000s hit, it was one could argue we've been in a bullish trend in gold price since the early 2000s. Of course, we have the
Yes.
massive cup and handle since then. And, here we are now at, what are we almost closing on $4,000 US. I
Yep.
think I feel like the conditions today, well, I kind of do remember vaguely the conditions back then. Yeah, it was mostly gold miners. It was kind of the only way to play gold, and no one really thought about going out and buying the physical, maybe because, it was difficult to do. There weren't the coin stores today were often stamp shops, and they didn't really, it was hard to buy it.
Yep.
But today, I feel like the conditions are vastly different when you think about so many different elements. We have massive government debt, which is not going away. We have huge inflation that is in reality way higher than what's being advertised. We have growing trends of things like lack of financial privacy, I feel like, because we're in a continuing growing digital world. We have talk of
Yep.
CBDCs. We had the UK over the weekend talk about digital IDs. It just goes on and on and on. In our growing digital world, and investors more focused on tech and AI and crypto, Boy, that's a lot to consider. And where does gold fit into that?
Well, it's interesting because I think increasingly I view gold as never been more relevant. And I think, maybe one of the great ironies of gold today is that I think the digital age, ironically, has given gold a new sort of sense of fame, which it didn't have, 20 years ago. And we'll get into that, in a second. But I think going back to where we were and where we came from, one of the arguments at the time for buying gold was people were thinking back to the 80s or the late 70s, boom and the
Yeah.
gold all-time high back in 1980. And we're saying, well, gold only useful in times of inflation. And of course, in the early 2000s, there were no at least official signs of inflation. And so we had, if anything, disinflation because of globalization. And so, these forces which are prevalent today, we didn't have the bank debt that we had or the government debt levels that we have today. Fast forward 25 years, we don't have the inflation. We don't have a lot of these conditions that were prevalent at the time. And so I think, now, gold has never been more relevant because people have really woken up to this idea that, hey, the amount of debt outstanding around the world is completely unsustainable. There doesn't seem to be any government that has a really serious approach or can take any serious approach to reducing levels of debt. Inflation numbers really just depends on what you want to believe, but clearly at the official level, even the official statistics are running higher than where the central banks want them to be. But unofficially, we all know that whether it's, private insurance or whether it's food or whatever, you want to, car prices, et cetera, that inflation is vastly higher than an additional 2 percentage points on top of CPI. And I think all of that is leading to this element of how what can people do about it as an investor. What kind of hedge, what kind of investment can you make if you're concerned about these kind of problems. And gold is right there at the top of the list.
I would tend to totally agree with you. I feel like it's never been more of a consideration for people, even given what's happened, say, over the past 5 years, where people are looking for something more secure, more stable that they can actually hold in their hand, right? I feel like life is like a pendulum, and whenever we get a bit too far away from center, things like gold come back into favor, and for a good reason. They never really go away, and people are looking for a bit more security and stability. What I find funny about inflation is that, in my view, most people don't even understand it. The government tells us that they're going to devalue our currency, usually by 2% a year, but people don't understand the concept of your purchasing power is going down 2% or whatever it is
Yeah.
every single year. You work, you get paid, and we're storing our labor in fiat dollars, which don't retain their value. So you go to spend it in the future, it's not honoring and respecting your labor. But in my view, if you can store it in something like precious metals, like gold, for example, you're protecting the value of the labor that you performed in the past. And when you go to use it in the future, it's still there.
Yeah, and that's why when people ask me about the price of gold and say, why is the gold price going up? You can give all the explanations, but sometimes, I think it's useful to reframe what you just said, which is maybe don't think of it so much as the gold price going up. Think about it in terms of it's the value of the, paper asset, the US dollar going down. That's probably the more important thing. And that sort of simple reframing sometimes helps people to think a little bit differently about gold. And that it's not necessarily a case that the price is going up,
Yeah.
it's that another price is going down.
So with tech stocks and AI investments and crypto, how do you feel that, as the CEO of GraniteShares, which offers a lot of excellent high yield ETFs, how do you, maybe it's a fight, I don't know what kind of challenge it is for you, maybe there is none, but how do you fight through that? I don't know, what is it? Like this generation of using apps and using, Robinhood to buy their ETFs and their crypto stocks, and trying to convince people that gold is worthy of holding in a portfolio.
Well, I think in some respects, the crypto crowd has done more for that than perhaps we give them credit for, because while they would like to present that argument as binary, in other words, why would people buy gold when you have Bitcoin available and or cryptocurrencies more broadly? I think to make the argument in the first place and to continue to make the argument, you have to have gold in the same conversation. And I think just by doing that, you present, therefore, albeit slightly differently, the case for gold itself. And while the case for Bitcoin has largely been made as a risk on, speculative opportunity, a way to make money, etc., I view gold as fundamentally the opposite, as a defensive play, a piece of permanent real estate in the portfolio, and like a insurance policy, right? You don't want to get an insurance policy after the house is burnt down. That the whole point in getting it is that hopefully you won't need it because it's going to be a small part of your overall portfolio or overall exposure, but you better make sure that if you do need it, you've got it. And I think that's sort of where we are with gold. And for certainly for younger generations or for younger people investing for the first time, I think it's okay if they don't have gold in the portfolio because at that stage they're looking to take risk, looking to be and probably the right answer is they should be taking as much risk as possible, because they've got time on their sides. But as things mature, your attitude to risk also matures. Your attitude to, how you invest matures. And I think, at some point you need to you have the realization that actually it's not all about just chasing absolute risk dollars or chasing return dollars, that there's a role for diversification of the portfolio. And you want to have some assets in there that are uncorrelated, some assets that perform differently. And I think, again, you look at the performance, of gold since it started trading freely after the gold standard. And, of course, like any asset, there are ups and downs, but, look at that chart and goes from bottom left to top right. And I think that shows the value of a long-term, asset in a portfolio over time. People will come to that realization at different points.
Yeah, it's just not a rock that collects dust, as someone said. I can't remember who it was. Just look at the performance over the past couple of years. I think it's up over 100%, and you can't say that about the S&P or other stock markets.
Yeah. Yeah. And I think, again, it talks to that there are real issues out there, and there are real concerns about everything from government debt to geopolitics, wars going on in the world, and all of that creates an environment where people need to sleep, be able to sleep at night, and there's a peace of mind element to buying gold or any defensive asset for that matter, and so it's just there's no simple answer, but having gold and investing in gold, is able to give something to the portfolio that other assets don't.
You mentioned young people, and that's one of my um, priorities is to get more young people involved in investing, first of all, and
Yeah.
to be knowledgeable about all the alternatives that are out there, not just tech stocks and crypto stocks. And that's why precious metals to me is very important. Now, of course, with the price of gold where it is today, it's getting more and more unaffordable for not just young people, but pretty much everyone. So for someone who is young, there's fractional gold, but there's also ETFs, like, for example, your bar fund, which people could get into to get some exposure to gold. And how does the bar fund kind of stand out or differentiate itself compared to, say, other ETFs, which are more derivative based?
Yeah, so one of the first ways, just to immediately address your point, which is a very good one. As we sit here today, an ounce of gold is close to $4,000, which is a lot of money for somebody just to pony up an ounce. But with ETFs, we are able to deliver a share for a fraction of that. So we denominate our gold fund in 1/100th of an ounce. So obviously 100th of the gold price. So we're somewhere along the lines of $37 a share, for example. So that's a very reasonable cost. You can buy one share bar for around that price. And obviously that will just track the gold price up and down. Gold price goes up 10%, then the value of bar will go up 10%, less the tiny management fee. So that's one simple way that we are able to differentiate in terms of giving people access to the equivalent of 1/100th of an ounce. Now, beyond that, as I said, it's a physical gold ETF, which means we own just physical bars of gold sitting in a vault. In our case, that's in London. But those are typically 400-ounce bars. They're LBMA, what they call Good Delivery Standard, which LBMA stands for London Bullion Market Association. So that's the sort of equivalent of the gold standard in terms of bars, the purity, the quality, etc. And they can only be refined from a certain number of officially approved refineries around the world. And so we store those bars. Those bars are really what constitutes the official spot gold price, which is a little bit different from the gold futures price. And we, like any highly regulated investment vehicle, we have an audit officially once a year, but we go even further than that. And outside of the fund accountant, which obviously is required for any regulated firm or regulated investment, we have an independent third-party metal inspector that comes into the vault 2 times a year, once at random, and does effectively a stockman's audit of the gold bars that are in the vault, versus the bar list that we publish on a daily basis, the audit report that we have on the website, which effectively says, do you have the number of bars that you're claiming you do? And the custodian's report is all checked versus those bars. So we try and be as thorough as we can to give people confidence that the gold is obviously there, that you have the backing, and then I think most importantly that gold is not lent out into the market. And it's what's called allocated gold that's owned by the trust or owned by the ETF, of which the shareholders own the ETF.
So walk me through the process. So if I'm someone who's buying some shares of bar, is that segregated and allocated to me based on my percentage?
It's not allocated to you as an individual, but it's allocated to the ETF. So you're a shareholder of, it's officially a trust. So you're a shareholder of the trust, and the trust owns the gold. So the trust has an account which
Okay.
owns the gold that's held in allocated form. So think of it more like it's the trust's gold, but you own the trust. So from a allocated or from a credit counterparty risk, the underlying custodian goes bankrupt. That is not a pledge, or that's not pledged against any other assets. That's independent, segregated from the trust and trust assets.
Okay, so it's still better in my view than just the paper derivatives where there's, in my view, big counterparty risk. You're just kind of speculating on the price of gold, and you really don't know anything.
Yeah, so that is totally different. So with bar, each share is backed 100% by gold, by physical gold. In the paper world, you have a scenario that's a bit like musical chairs, where everyone's running around and somebody, takes the chair away, and it's bad luck if you're the one that goes without the chair. And so it's a bit like that, where you have all these claims that are not supported one for one by physical gold. And if the music was to ever stop, and people wanted to redeem all their paper for gold, then you wouldn't be able to do that.
And
And so that's a big difference.
I find that those are the types of gold investments that the majority of investors maybe are only familiar with. There's a lot of precious metals, mutual funds, and gold
Yep.
ETFs, and I feel like the people really don't understand. They think they're buying gold, but they're really not.
Yeah, exactly. They're buying typically exposure to a price,
Yeah.
which may be the official gold price, it may be a futures price, it may be some other calculated price, but it's not necessarily backed by gold one for one, which is a different thing.
And in my preference, at the end of the day, I would prefer to own the physical. It's the old adage, if you can't hold it, you don't own it. But at least by buying something like bar, which is backed by the physical,
Yeah.
at least gives me a little bit of assurance that the counterparty risk is much lower than, say, a paper derivative fund.
Yeah, no, absolutely. And I think, to me, it's a clear thing that there's nothing wrong with owning it physically. It just becomes a quantum. So, owning a few coins, even a decent amount of coins, is all fine. But if you want to put in a few million into coins, it becomes a lot more challenging.
Yeah.
And so then you need something a bit more efficient to do that and to be able to replicate the price better and get in and out without paying premiums or discounts.
That triggers my brain to think about silver and trying to store that much weight in silver. Um, are you
Well, that's why it's challenging.
are you thinking about a silver fund? I know Curve launched one today.
We look, I mean, it's all these things, I tend to not live a life of regret. But when we launched gold, we thought that we really had a genuine proposition out there that was different and we could compete against the existing offerings. Silver at the time was already quite cost effective in terms of ETF, from an ETF perspective. And it was funny because silver price was low at the time we launched bar. And maybe as a consequence of silver being popular as an investment in ETF form, the custodians didn't really want it
Mm,
because the amount of metal they have to store, because an ounce of a silver is
yeah,
just so much cheaper.
yeah.
The custody rates that we were quoted at the time were just off market. It was almost as if the custodian was saying, "Look, I'll do it for you, but you're going to be paying a crazy off-market rate for me to store that metal for you." And so we didn't go forward because we couldn't make the product competitive at the time. And so we focused on platinum, which was, again, much, much higher value in terms of an ounce of platinum versus an ounce of silver. And so that worked out for us. But yeah, the silver's a funny one. You just need a huge amount of storage, and not many custodians are sort of ready to price that.
Yeah, I'm kind of happy you're not because I find that silver and gold are quite different. Silver is way more volatile and it's getting way more exposure today. But as you know, the price typically will spike up, hit its high, and then it will drop down
Yeah.
for the next 10, 15 years. So, the amount of capital and startup costs to get an ETF off the ground only for such a short period of time, probably not worth it. And
Yep.
I'm always a proponent to buy the physical anyway, or as an individual.
Yep.
One of my big things, Will, is creating another source of income, especially the conditions that we talked about earlier. Life's expensive today, and unemployment is big here in Canada. Life's not getting easier, and creating another stream of income, I feel like, is for everyone, regardless of their age or where they're at in their life. And it doesn't mean necessarily driving part-time for Uber or go delivering pizzas on a weekend. It's for me, it's creating a stream of passive income using high yield ETFs.
Yep.
And I like to marry that up with precious metals too. So, what I tell friends, family, and my clients in my coaching is to build some solid legs, and that involves holding gold, silver, and platinum, but also creating that passive income stream, which just reduces
Yep.
risk and just, makes life a lot easier and builds that peace of mind. And I know GraniteShares has a lot of ETFs that are based on income. I feel like you offer some pretty innovative products, which is starting to move away from the traditional covered call approach and using more of the leveraged with the income, which you get the best of both worlds. So maybe
Yep.
share a little bit about some of your yield boost funds and how that's going so far,
Yeah.
because they're relatively new.
No, I'm glad you brought that up because that's a really important part of, I think, investing zeitgeist at the moment is this idea of creating an additional income stream, outside of your job. And the other way we see it is that, traditionally a lot of people did that in property or in real estate. And, unfortunately, with the government debt burden, increasing with deficits, with just the general need for governments to raise more taxation dollars, what's the most visible and obvious part of anybody's net worth? It's a house or physical property. That's the first thing they come for when they want to raise taxes. And so a lot of investors, a lot of people have been burnt by real estate, whereby, the real estate rentals and things are just not as profitable as they once were when taxes are taken into account, when frictional costs, the cost of all of repair work, etc., raw materials has gone up massively, since COVID, insurance costs, etc. So this idea that where can you build that stream of income, comes back to, well, the market is one way where you can do that. And so Yield Boost is just our brand for high income options based ETFs. And so what these do simply is we sell options, put options to be more specific, on underlying ETFs. So we sell a put option. When you sell anything, you get something in return. That's called the premium, and that premium is distributed to investors. And at the same time, we buy a put option, which is a protective measure. So it provides some downside protection if the value of the underlying portfolio goes down. But what this means in sort of simplistic terms is that you can generate very, very high yields. And the kind of yields I'm talking about range from sort of 50% at the low end per annum to upwards of 150 plus percent per annum. So extremely high yields. And the yield boost of secret sauce is we sell put options on underlying leveraged ETFs. So if you think about selling a put option on a stock, for example, or a call option on stock, the payoff's the same. You would generate, let's, for argument's sake, say, you get a premium of 10 for doing that. Well, if you were to sell a put option on a leveraged version of the underlying stock, let's say 2 times leveraged on exactly the same stock, you would get, for all intents and purposes, 20 or 2 times the premium. And so that's why Yield Boost is able to deliver a lot higher yields, and therefore has money left over to buy protective puts as well for the downside. So simply put, these are just high yielding ETFs. They're something that in terms of options form, they've been around for some time, but what's different is nobody's done these on individual or single underlyings and on leveraged ETFs, and done it on a weekly payout frequency. So from that perspective, they've become super popular with people trying to build high income portfolios because they do exactly what they say on the tin. It's high income paid out weekly.
Imagine that, for the people listening, getting 30 to 40 to 50% annual yield, getting distributions on a weekly basis. I think a lot of people are only used to, and because they're only knowledgeable of what maybe they learned or didn't learn, or what their advisor tells them, and that's, put their money in a balance fund, and you should be happy with getting 6 to 8% a year. Of course, what we talked about with inflation, maybe it's a bit higher than that. So you're actually losing, especially if it's not in a
Yep.
registered account, then you're actually losing money every year. And I feel like a lot of people don't know, first of all, or maybe don't understand that these high yield funds can really be a life changer. It doesn't, you don't have to save and save and save for 30 years to hope and pray that you have enough for retirement. But with a disciplined, consistent approach to investing in some of these high yielders, you can actually retire earlier. Or if you're someone who just is sick of the 9 to 5, that kind of those fire movement people, the financial,
Yep.
is it uh, fire?
Financial independent,
There you
retire
go.
early.
Retire early, yeah. You could do this in 5 to 10 years and maybe have $5,000 a month in distribution. So again, it's raising the awareness that these funds are out there. They're not sold from some guy in the parking lot at the mall. They're not scams. It's just a matter of, I'm a big proponent of regaining control of your finances as
Yes.
individuals. I feel like life today, we delegate a lot of our life out to everyone else. And finances is one of the things where people may be scared. They may feel like they don't know enough, but it's worth the time to learn, because that's going to be the driver for your dreams or your finances. And it is possible to earn 30, 40% on generating income. And the other thing I like about income is that unlike growth investing, the only way, as you know, I can make money in growth investing is if the price goes up. And then I only make money if I sell it, and then I have to find another stock which hopefully does the same thing. And I wasted so many decades with that investing style, but with income style,
Yep.
I get income. Now I have choices. I can reinvest. I can either use some of that if I have some unexpected bills this month, or I can maybe buy a growth stock that I think is really going to be good. So I just have options. And again, most people have no clue about these income funds that, first of all, and that you can get high yields in a fairly reliable way. But obviously have to understand their strategy, their style, and what they're
Yeah.
investing in.
Yeah, and another point of that is that the typically when you need investment dollars the most is in the market collapse or in a dislocation type environment where people have, legged everything into a growth fund. Market's down 50%, and you're like, goodness, I wish I could buy more here, but I don't have the capital.
Yeah.
I've got no money. It's all tied up in this fund. I don't want to sell it because I just take a massive loss. So the value of having an alternative income stream can be huge, especially, for times like that when it gives you some liquidity to reinvest or redeploy in other areas.
I find they work great in flat markets too. So if the market's not doing anything, your growth stock's just sitting there, but your income fund is still paying you
Yep.
income, right? And again, like you said, if it's down, you can buy units on sale, and if it's up, oh, you've made a capital gain. So you're winning two
Yep.
ways, not just one way.
No, exactly. And look, they're super popular. I think is a probably one of the categories. There's more people find out about it. More people are switching on to this idea that you can generate, additional income streams. That investing is not just about retirement. That retirement can be a different strategy, but also creating a secondary income stream, has huge value.
So knowing what you know now, after all these years in the industry and all of your life experiences, if you were to give some advice to your 25-year-old self, maybe in investing or even life, what advice would you give yourself?
Well, I think from, above everything else, my journey has been on the entrepreneurial side, and clearly I have my own business now, which, fortunately, has been quite successful. I think the only advice I really give is that I think when you're starting a business or want to do something, there's a tendency to try and seek the perfect timing. Like you maybe need to have an extra year of experience or an extra few years of experience, maybe do, a couple of extra roles to develop. And the answer really is that I don't think that matters. I think what matters is just getting on with it. And sort of there's no better time to start than now. And I think from that perspective, I would have started earlier if I'd known today, or known then what I know today. So, I think sometimes I think in that context that, you know, you'll learn very quickly. And, there's never really a good reason to delay anything. And probably the right answer was just to get going as soon as you really had the idea that that's where you ultimately wanted to go.
I feel like you're someone who has uh, led life doing something they really love to do. Sometimes the investment industry can be a real grind, and it's focused
Yep.
on returns and making money and making profits and competition and all that. And that can be good to a degree, but I feel like you're someone, especially with your gold journey, that you've done something that you're passionate about.
That's right. I mean, I think that there's, we don't need to go into it in detail, but suffice to say that it's can be brutal, doing what I do. And there's just no way that I would still be doing it if I didn't like it. And, there are very big highs and there are lows as well. But it's just something I've always loved this business. Love the markets. And I have to say, that honestly speaking, the vast majority of people I meet in this business are actually really nice people. So it's something that, I've gotten great enjoyment from, great satisfaction, and continue to enjoy it. Hence why we continue to, to launch new funds and, to be out here talking to people and, educating the market.
I don't like to give predictions, and I never ask people to do predictions because the crystal ball is never of any use. But
Yeah.
given what you know about where we're at right now and where things may go, um, where do you think we're heading? And I don't mean a price in terms of gold. I just mean where do you think we're going in terms of financially and even not politically. It's not to be political, but just, given where the
No, no.
world's at today, I just don't see this cycle of debt going away tomorrow. What's your take on things?
Look, I think you're right. I mean, this is one of the biggest, if not the biggest issue out there, which is this massive accumulation of government debt. And again, not to be political about it, but the typically the role of government only goes one way, and that's getting bigger and bigger. And so I think there's been some valiant efforts around the world to try and do something about it. Whether you're talking about down in Argentina, or even what the administration here in the US tried to do with Doge. But even that and sort of the best laid plans, you still had the amount of debt increasing even after that. And I think that that just goes to show that despite the headlines and all of the fuss around it, that the efforts of Doge were unfortunately pretty futile in the grand scheme of things in terms of the absolute dollars that are at stake and the absolute growth of debt, and therefore the national interest bill that taxpayers are paying. And this is again, this is not a problem that's unique to the US by any means. This is the Western world, and not even the Western world. I mean, China's got huge amounts of debt as well. So this is a problem everywhere. And again, I just don't know if anybody really has the political will to do something about it, because it's not a vote winner, that's for sure.
There is no political will because I mean, here in Canada, we used to have a pretty um, fiscally responsible government, regardless of stripe, and balancing the budget and being fiscal responsible was usually one of a common platform of any of the parties. I'm just thinking, reflecting, I don't think I've heard that now for a long time. And I know during the last US election, balancing the budget or austerity, those just are not, like you said, they're not vote winners. And the votes are handing out more dollars and making programs bigger. And I feel like we're in this cycle of perpetual debt. And central banks, as you know, are hoarding gold. People in Asia, particularly individuals, are used to owning gold privately. Europeans as
Yep.
well. Here in North America, not so much. Owning gold is not on anyone's radar. I mean, I don't even know if it's 1% of the population who even owns an ounce of silver. So
Yeah.
something's,
But that but that but that's largely, I think there's again some good reasons for that, in that, post post Second World War at least. I mean, the US, you can argue, hasn't had there hasn't been a good reason for people to own
yeah.
gold, in the sense that there haven't been any hyperinflation crises, or any sort of capital controls of the economy, massive distrust in government that means that you need to hold all of your wealth in a currency outside the dollar. That hasn't happened to the US. And so, and these are real experiences that have been faced by people around the world and other countries. But I think as the situation goes by, and every year we see these same old problems, and no real solutions. I think people start to think about that more and more and say, well, what can I do about it? If the government's not going to do anything about it, what can I do about it? And again, we've got to talk about gold, but we also have to talk about, as part of the crypto narrative, and why people got so enthusiastic about Bitcoin. It's all the same thing in my mind.
So where do you kind of see things going, say over the next year, 5 years? Maybe that's too far out. I'm not
Look,
sure.
I think it, yeah, I mean, I think it goes the same way as, the debt, unfortunately, and the political will, which is that until someone wants to do something about it, then, that increases creating an environment where gold prices, price of Bitcoin, etc., I think will prosper in this environment where people are looking for that antidote. And I've said it, I think gold has become the de facto alternative to the dollar. It surpassed the euro in terms of official holdings outside of the dollar. And part of that is you've got central banks around the world buying gold at any price. They're not price sensitive to that because it's beyond price. It's about diversification. It's about providing an alternative to the dollar.
Yeah, it seems to have decoupled from the dollar, where traditionally it kind of moved with interest rates, but now it seems
Yeah.
to have decoupled from all of that and just keeps going up.
Yeah, and I think again that's partly the environment that I mean, or totally the environment that we're in, and that there's I think increasing realization by people that you need to be able to do something yourself. This is not going to be a problem that's going to be solved for you. Then once it comes back to the income thing we're talking about as well, there's no one going to help you other than yourself. So you can have a great job and that's wonderful, but if that job ends tomorrow, then where's your income stream? And so doing something about it, ultimately it's a personal responsibility issue, and I think that's what you see in gold.
Yeah, we've seen people who thought they had ironclad jobs lose their jobs, or even if you have a good paycheck, we're seeing that being eroded with higher taxes, obviously with higher prices, so your take home is less. So often that couple who's bringing home two, 300,000 is still complaining that they don't have enough money. And
Yeah,
so,
and I think we've seen the headlines, David, but we haven't even talked about the potential, fallout from AI. And
yeah.
everyone's sitting around now going, "Oh, I wonder if my job's safe with AI." In 10 years' time, it may be less. That might not exist. So again, that's another warning sign that's there that people need to act in terms of being prepared.
Yeah, being prepared, I feel like, is to be your own central bank, right? I know here in Canada, we have zero gold reserves. We're not buying gold whatsoever. We sold off all of our
Yep.
reserves, I don't know, maybe 20 years ago, even though we're one of the largest gold producers in the world, which makes complete nonsense to me. It's like
Yep.
you have to be your own central bank and you have to own your own gold and create your stream of passive income to provide that security.
Yeah, I mean, the same with us. Obviously, in the UK, that we had the infamous, selling of Gordon Brown, who was the prime minister or the chancellor, I think at the time, sold the UK gold reserves, which became known as the brown bottom. I think it was like officially the low of the gold market. But again, just another example of the follies of some of the major Western governments when it comes to gold.
Do you feel like we're in a bit of a battle between currencies right now? And I mean like blocks, nations creating, say, BRICS versus the West with gold versus crypto.
Definitely. I mean, again, that's part of the reason why central banks are buying gold. And this is about the de facto alternative to the dollar. And I think that goes to countries like China and the sort of allies of China looking for, alternative system that is not, dominated or controlled by the US. But I think there's also some realization that, with, US hegemony that you get, for example, what happened with Russia, in terms of freezing assets from Russia and or central banks that, people say, well, if it happened to them, it can happen to us. Again, we need some diversification that we didn't really think about before. And so again, there's an element of distrust, and I think gold thrives in that environment where if we have perfect trust, then arguably there's not much need for gold. And the reason why gold thrives in that vacuum is because it is that antidote. That where there's a lack of trust, there's a trust in gold.
Yeah. From what I'm hearing, gold's not going away. In fact, the argument for it is probably stronger than ever, stronger at least that I've ever heard in my lifetime, right?
I think that's it. That's the irony of the digital age, is that
Yeah.
just when people thought that the argument for gold would have completely gone away, it's never been stronger.
Well, I'm going to give the last word to you. Any final thoughts, words of wisdom?
I think we're in a very interesting time. I mean, again, for I'm sure people watching this show will be very familiar with gold and will be all in on it. But I think something maybe that we haven't talked about. We touched on it, but I think if you haven't taken a look at platinum, maybe this is the time that the price of platinum's been depressed for many years, and in this gold breakout or this gold bull market, the price of platinum has broken out over the last few months, outperformed gold certainly this year to date, handsomely outperformed major stock market indices as well. So, platinum's an interesting case where, for the longest time, an ounce of platinum was worth more than an ounce of gold. And so much so that in the English language, the word platinum became synonymous with above gold. Platinum credit card's better than a gold credit card, and so on and so forth. So we'll see if this is finally the time to shine. But for anybody that's maybe not looked at that, then have a look at platinum as well.
I agree. From a ratio perspective, it's the least expensive of the three metals, probably the best value right
Yeah.
now. Yeah.
Yeah, and has been in the doldrums for some time, but maybe it's platinum's time to shine.
Yeah, let's hope so. For everyone who owns at least some of all these metals, I think everyone's patience is running thin, but is happy to see gold running and silver finally making a move. And
Yeah,
platinum's actually outperformed silver this year that most people probably aren't even aware of.
yeah, no, absolutely.
Well, Will, I want to thank you very much. It's a pleasure to have a refreshing conversation with a different perspective, not just on investment, but also gold and a bit of its history and how
Yeah.
it can play in someone's portfolio, and also how it can provide some stability and security and peace of mind. So thank you again.
No, thank you, David. It's been a pleasure to talk to you. Thank you so much.
So, how'd you like that? That was my conversation with Will Rhind, CEO of GraniteShares. I hope it gave you fresh insights on gold, wealth preservation, and creating income streams for real financial independence. If you'd like to take the next step, why not grab my latest free guide, How Savvy People Are Moving to Precious Metals, or book a free 15-minute discovery call. Both links are in the show notes. Thanks for listening. Until next time, keep building your independence, your freedom, and your future in ounces.